My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, have you ever wanted to get involved in multifamily investing, but you weren't quite sure where to start, how to start? Do you want to be part of the GP team? Do you want to be part of the LP team? What the heck is a GP? What the heck is an LP? Are you kind of confused? Well, today's special guest, Jim Pfeifer. There you go. Sorry, I was going to screw it up there because I'm looking at the last name and I'm thinking Michelle, but anyhow, it's pronounced Pfeifer. Jim Pfeifer is a very accomplished real estate entrepreneur, syndicator, and he works on the LP side. And he's very, very closely aligned with Bigger Pockets. In fact, Jim, if I'm not mistaken, they bought you out or you guys partnered up on something. So we'll dig into that. So Jim Pfeifer, welcome to the show. Great to have you.
Thanks for having me, Dave. Great to be here.
All right, man. So give me a snapshot of all things, Jim. What do you do when it comes to real estate?
Yeah, I started as an active investor and quickly found that wasn't for me. I wasn't very good at managing the asset.
Amen, brother.
Yeah.
Not good at managing the asset or the tenants or the toilets or the termites or any of that stuff.
Exactly. And so that's when I found syndication. I realized I could hire an asset manager, and all I have to do is vet the asset manager, make sure that their deal looks good to me, wire them some money, and they'll go do all the hard work, and I'll just sit back, hopefully, and receive reports and distribution. So I am completely a limited partner in these transactions, but I am a full-time passive investor in real estate syndications.
Very cool. So Jim, did you start off with like $1 gazillion so that you're able to become a full-time limited partner, or how does that work? Because I mean, that sounds great, but not everybody has millions of dollars that they can apply and become full-time.
No, this isn't like, you can't do a house hack or you wholesale. Like you do need some capital to do this type of investing. Now you don't need millions. There's ways where you can get, the minimum investment on a lot of these deals is $25, $50, $100,000. So that's a significant amount. But there's ways you can, group invest and lower those investments. But yes, you do need capital to do this type of investing. But what you find is once you start going, the snowball grows pretty quickly because the largest eroder of wealth is taxes, right? And as you know, any kind of real estate, there's tax benefits, and syndications have great tax benefits. So that allows your snowball to kind of grow more quickly. But yes, you do need some capital to get it going.
Now, you come from a financial planning background, if I'm not mistaken,
yes.
Jim. So what kind of switched your focus? Because most financial planners that I know, it's all about the market, like stock market, right? So mutual funds, that kind of thing. So when did the light bulb go off for you that real estate might be a better place to go, or at least a different place to go? And what does it kind of look like within your personal portfolio? Like, do you have other stuff too, or?
So that's a great question. The reason I got into real estate, I was an accidental landlord. 2008 came, we built a house, we couldn't sell our old one, so we had to rent it out. I hated it. I was the landlord, managed the guy, had the best tenant in the world. He made me take my shoes off when I came into my house, which I'm like, this is my house, I can leave my shoes on. But he was a great tenant, but I absolutely hated it because I had to manage it, right? But I loved what happened to the money. And I figured out, well, I want real estate. So then I started buying more rentals and started making money in real estate, but realized I wasn't good at that. But I got rescued by the market because we always had appreciation back in those days. But I just kept leveling up until I found syndications, and that's what changed for me. But what happened was, as I was kind of starting this real estate journey, I changed careers into financial advising. And what they do is they break it down and they start teaching like you don't know anything about money, which I was always a finance guy, and I was confident that the market was the place that you build your wealth, right? But now think about it. How many people do you know that make money and built, big wealth in the stock market? None. They buy businesses or real estate. So as they were teaching me about money, I was applying it to real estate, and I soon realized, oh, wow, these paper assets, no thank you. I want real assets to produce cash flow. So I quickly kind of changed and I'm not going to be a financial advisor because I can't put my clients into things I'm doing, which is real estate. And the reason financial advisors don't recommend real estate is, one, they don't get paid on it, and two, they're not licensed for it. So they can't, right?
And most of them don't understand it.
Well,
Like,
yes,
I mean, up here in Canada, initially I was thinking about getting into that space. I even got my little Canadian securities course certificate up on the wall.
Yeah.
And I remember, Jim, I was taking the course and I was learning all about mutual funds. I thought, I wouldn't buy one of these things.
No.
Why would I want to sell this for a living? Why do I want to sell people into these crappy investments? So yeah, that's when I pulled the plug. So I hear you. Okay, cool. So you're kind of all in on real estate. Now tell me a little bit about the business you just sold to Bigger Pockets, or they partnered up with them.
Yeah.
Tell me a little bit about that.
So once I transferred to, out of active real estate in this passive syndication real estate, I realized that I needed help. I didn't know everything I wanted to know. So I said, I'll just start a little mastermind of 12 people who are in this, do the same thing. We'll meet and have dinner once a month in Columbus where I live. And so our first meeting, March 18th, 2020, if you remember back, pandemic canceled that. We went on Zoom, and all of a sudden I realized that everybody wants to do this type of investing. There's a big appetite for it. So we're on Zoom and no one had anything to do. So we could get some pretty high profile guests to come onto our Zoom meetings. And so the community grew. We spent the first year trying to limit the number of people to 50 because I thought of it as a mastermind. Once I realized the demand for people wanting this type of education, we made a website, we started a podcast, and we grew it into Left Field Investors. The reason we called it Left Field Investors, I know you're Canadian, so there's a little bit of baseball up there, but
don't tell everybody from Toronto there's only a little bit of baseball up here.
Exactly. So all my former colleagues in the financial advising world said, "Oh, Jim, with your real estate, you're way out there in left field." So we decided to call us Left Field Investors. Nice. So we built that community up to about 2,500 members with podcasts. We had deal webinars. We had meetups. It was a nice community. And we started talking to Bigger Pockets, who does more of the active side, and they wanted to start up and serve the community of passive investors. And they realized that we'd done 4 years of building this community, so we'd learned a lot. And we also realized we didn't have the resources to give the services to our community members that we wanted to. And so Bigger Pockets had the resources, we had the knowledge. So we did a merger and started Passive Pockets, and that happened in September of 2024, and now we're just continuing the rollout of this great community.
Oh, that's awesome! And as we're recording this, it's November, so it's just a few months in. Congratulations! That's a very exciting merger.
Yeah, thank you. We're thrilled. I mean, Bigger Pockets, they've just been fantastic in listening to us because we did learn a lot, right? Building this community, we didn't build it on purpose into a business, but you have to turn it into a business, right? And so the only way we could sustain it was by getting the resources of Bigger Pockets, and they've just been fantastic in nurturing the culture, because the culture of Left Field Investors was the most important thing, and that's what most people stayed in the community because they met people they liked and they know, and you learned together. And so, keeping that together was important.
All right. So tell me a little bit about how it works, if you don't mind, Jim. So you got a community of people who want to be passive investors in syndications.
Yes.
They got the same philosophy you do, which is, hey, let the experts run the show. I'd rather put in my money and be in the background, but I want to learn how to vet these sponsors and these syndicators and make sure that they're a good fit, because, there were the go-go times of 2020 and all that. And then hit the wall.
Yes.
The last couple of years, and a lot of LPs got burned.
Yeah, they did.
Yeah. So tell me a little bit about how you guys work.
Yeah. So basically we are a support system for LP investors. We provide education, networking, and connection to operators. So, you join our community. We have a forum where people post, "Hey, have you ever heard of ABC Operator?" And then, yes, I've talked to them and they're great. They're not great. There's reviews of sponsors, 5 stars, like a Yelp review. You can go and put in your experiences with operators. So the whole point of this is these investments are long-term, they're illiquid, and they're completely out of your control. So if you want to figure out, hey, is this a good operator? What are you going to do? Invest with them, give them $50,000, and then wait 5 years to see if it worked out? That's really difficult, right? And you can't get out of these. It's not like the stock market where you put some money in and you can take it out if it goes bad, or even buying active real estate. You can buy a house, rent it out, and then if you're like, "Oh man, I need this money back," you might lose some, but you can sell it, right? These syndications, you can't do that. So it's very hard to find quality operators. It's very hard to learn how to evaluate these deals. And because of the SEC rules in the United States, a lot of these are hidden. You can't even advertise these investments. And when you want to invest in one, you have to send a wire. Most people only send a wire when they buy a house. So all this stuff makes it very hard to learn, understand, and get comfortable with this type of investing because of the long-term nature and the lack of control. So what do? We're trying to turn community into a verb, right? We community the operators, which means all of the community gets together and we talk about operators. We do the same thing with deals. We community a deal, which means we all analyze it together. And so in our community, there's a forum where you can talk about stuff. We have operators that come on and present deals, and we'll give some opinions on that. Now, we don't recommend invest in this deal or don't, but we say, hey, here's some things to look at. Here's some things I would look at. Here's some things I would discuss. Here's some questions to ask. So we're really just a support system for the LP to help people do this, because it is, I can't think of a better way for someone to build wealth and make your job optional or have financial freedom, whatever that means to you. You can do it this way, but you can only do it if you know it exists and you know how to do it. And that's what our community tries to do, is help people do that through connections to GPs and other LPs.
So do people in the community have to be what are called accredited investors, or can mom and pops get involved as well?
Anyone can be involved. So, most people cater to accredited investors, and it makes me crazy, because just because you have money doesn't mean that you have any greater education than somebody who doesn't. So my personal belief is if you belong to a community, whether it's Passive Pockets or a different one, that should make you accredited. But unfortunately, it doesn't. So yes, there's places for non-accredited. What I find is the non-accredited people are the most engaged, because they have to work the hardest to find the investments and find operators who are willing to take them on. So it's much harder to be non-accredited, but it's absolutely possible and you can do it. You just have to be careful, because these are large investments. You don't want to put too much of your net worth in one investment, right? If you have a $50,000 net worth, I do not recommend you invest half of it in a syndication.
Mm-hmm. Yeah, fair enough. All right, Jim. So basically the community is there to help limited partners, passive investors get educated about how the whole thing works, learn how to vet potential sponsors and syndicators, get word of mouth referrals and warnings about good and not so good folks. So it's really kind of a, but you guys aren't pushing any particular kind of investment. Like the skeptic in me is going, okay, well, is this just trying to funnel people into investments that Bigger Pockets is recommending and somehow making a profit from? So is it,
how does that? It's a great question. So we do provide deal flow, but we don't, Bigger Pockets isn't recommending any deals. Passive Pockets isn't recommending any deals, but we're in the industry. We have partnerships and we know operators. So operators will come to us and say, hey, I'd like to present a deal on your platform. And we allow them to present that deal. And then the investors, the LPs in our community, can decide on their own if they want to invest in it. Now, we do provide some content. Like I said, we'll look at the deal, and we have we do deal reviews where we have our LP panel of experts will go and they'll look at the deal as if they were going to invest in it, and they'll come up with some questions, some pluses, some minuses. And we'll do this with the operator, and so they'll ask the tough questions to the operator and say, hey, what about this? What about that? And at the end, we won't make a recommendation, because everybody has to make their own investing decision, but we will say, hey, here's some things we liked, here's some things we're not sure about, and now you go and make the decision on your own. And coming up, which we're gonna do as well, is the opportunity to get better terms if you invest through Passive Pockets, because we can aggregate all of the investors, and often there's different classes where if you invest $1 million, you get better terms than you do if you invest 50,000. So we can aggregate all the people that are investing in that deal from Passive Pockets, get to that $1 million threshold, and all of a sudden you're getting, instead of a 12%, pref on the back end or whatever it is, you're getting 13 or 14. So there are benefits for investing together as a community.
No, that makes a lot of sense. So Jim, as we're kind of wrapping this up, if somebody's listening to this and they're going, okay, well, what are some questions I should be asking sponsors or syndicators? What are some of the let's say the top 2 or 3 questions that you would recommend people always ask a potential sponsor?
Yeah, so you got to ask about their experience and track record, and those are different things, right? Your track record is what you've done in the past. Now, anybody who started before 2020 has an excellent track record in that time period. Now, what's their track record now? that's something to look at because there's been some rough deals. So if you just see a track record up to 2020, you got to ask some more questions. But their experience is, how did you get through these difficult times? Did you have capital calls? Before 2020, one of my questions was, have you ever had a capital call? And if they say yes, I probably hang up and say, thank you, goodbye. Now you can't do that. Right now, it's easier a little bit to evaluate because I can say, how did you get through the capital call? How did you communicate that? Tell me, what you did to rectify it. Because I understand when interest rates go up, how fast they did, that people are going to struggle. So I want to know how you got through it. That might have made you a better operator today than you were before. So I want to know that. So that's one thing, experience and track record. The most important thing to me is communication. And so I make them jump through all kinds of hoops to show me that they can communicate, because I'm looking for two things: timeliness of communication and quality of communication. Because if you don't test their communication before you wire them $50,000, let's say they're not very good at communicating before they get that wire. What do you think they're going to do when they have your money in their pocket? You're never going to see them
Crickets.
again.
That's what's going to happen there, Jim.
You're exactly right. So what I do is I test them, and I'm kind of a pain in the butt. I keep sending them emails, seeing how long it is before they stop talking to me, because I want to make sure that you're going to communicate with me. I ask for sample reports. I want to know everything about your communication, because if you're not communicating effectively before you have my money, I'm not investing with you. That not a chance. If you're not a good communicator, I'm done, because these are out of your control, long-term illiquid, right? We talked about that. So the only thing you have after you send that wire is a report and distributions and an email or phone number of that operator. So you got to make sure they're going to communicate with you.
Yeah, very good points. I'm just jotting some notes here because that gave me a good idea for your episode title. Awesome, Jim. So, hey, I'm sure there's going to be a lot of people going, hey, this guy knows what he's talking about. I'd like to be part of this, or at least find out more about the community. In which case, where should people go?
Just go to passivepockets.com. We have a 7-day free trial, so you can sign up. You can run through the community, check it out, check the forums, check out the investing tools, connect with me or anybody else on the direct message platform in there. You can do anything you want in the forum. In the forum and the community for 7 days. And if you like it, then you pay for it. If you don't, find another community. But I would say the most important thing you can do as a limited partner investor is join a community. I believe Passive Pockets is the place to go, but you want to find a place that the culture of the community fits your personality. If it's not Passive Pockets, there's other communities out there. I think this is the number one thing you can do to improve your investing is join a community.
Sounds good. Jim, thanks for being on the show.
Thanks for having me.
All right, everybody, take care, and we will see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.